I am now so convinced that the risk is so minimal in these mining stocks relative to enormous upside. See, if you've been sitting on the sidelines for the last 20 years and not buying any gold, there's no point in now buying it at 3,200. Buy the gold stocks, because it's like you're buying gold at 1,500, because that's about what they're priced for. Gold stocks have not accepted gold. The earnings that these companies are going to report in Q1 is going to be great, but Q2 that just started in April is going to be phenomenal, because not only did gold go straight up, oil went straight down. I think the earnings are going to blow out. I mean, these stocks are trading at single-digit multiples. Finally today, a couple of one or two companies upgraded Newmont or Barrick Gold buys. So this is just the beginning, right, of this move. Now, gold, the GDX, which is a gold stock index, was up 19% this week. So triple the rise in gold. That's what's supposed to happen. But gold stocks have a lot of catching up to do. Now, year to date, the GDX is up 47%. That's only about double the rise of gold. But the problem is, gold went way up last year by 50%, and gold stocks didn't even keep pace. So gold stocks are nowhere near record highs. Yes, they all hit 52-week highs today, the indexes. And it's a great week, it's a great year, but we're just getting started. I think these stocks could still double again or more between now and the end of the year. Maybe triple. Now, what do I think the realistic upside potential for gold is this year? Well, I think 4,000 is a very reasonable target. I mean, especially if we can move $250 in 3 days. And we haven't even had the real crisis yet. We haven't even had the bond market crack, which I think is coming. And, the bond market cracks. Remember, we're going to have a financial crisis. I said it's going to be isolated here. But if our interest rates spike and our import costs go up, it's going to be a wave of bankruptcies. All these retailers are going to go bankrupt because nobody can afford to buy their products. They can't borrow the money, and the prices are too high anyway. And so they default on their loans. Now the banks are stuck. The banks are going to be all underwater because they own all these long-term loans and bonds that have collapsed in value. Remember, the Fed never stress tests a single bank for stagflation. They never stress tested an environment where there's a recession when interest rates go up, because they thought that was impossible. And they also probably knew that no bank could survive, so why bother to scare the world by testing for it? So we are on the precipice of the worst financial crisis that we've seen. And there's not going to be any bailouts, because when the financial crisis was about the mortgage market, the government could bail out the mortgage market because the government was able to buy up all the toxic assets and replace it with its own credit. So people wanted treasuries. But if the treasuries are the epicenter of the crisis, it's a sovereign debt crisis, who's going to bail out the United States? Right? The only ones that could have were like China and Japan, but we've alienated them. So they're not going to come to our rescue. All you got is the Fed. But when the Fed bails us out, it's massive inflation, right? They have to crank up the printing presses. And so right now, I think there's just so much upside in these gold mining stocks that could happen so quickly because nobody is in them. The public doesn't own any gold yet. They haven't even started. I mean, maybe they bought a little. I don't know. Remember, all of Q1, except for one day, there were net outflows out of GDX. So the public's been selling GDX all year, yet it's up almost 50% on the year. I mean, what a contrarian indicator. So there's nobody to take profits because everybody's gone. I mean, yes, somebody owns these stocks, but the people that own them, they ain't selling. I mean, I own these gold stocks. I actually bought more. I added to my positions a couple of days ago because gold stocks initially went down, just like COVID, right? Remember when COVID hit and gold stocks got clobbered? I was like, this is stupid. We're going to print all this money. That's good for gold stocks. And they immediately turned around. That was the same feeling I had, and I said it on this podcast last week. They threw out the baby with the bathwater. Everything that was happening is bullish for gold, not bearish. But I mean, we have so much to go as everybody starts moving in to this trade. But what I've been talking about for years and years and years is the end of America's ride on the global gravy train, right? We're going to stop the trade deficits, but that stops the phony prosperity that those trade deficits enable. No more low prices, no more low interest rates. And so the whole bubble economy that was built on that foundation is going to come crashing down. And the world is going to be withdrawing their capital. And so all the returns are going to be abroad. So it's going to be the foreign stock markets and then the emerging stock markets. For the last 10, 20 years, the US was the only game in town. That game is over. Now, most people don't realize the game is over. And they're still trying to play it. They're going to lose, right? What you got to do is recognize everything that I've been saying. It's all right. Even though some of it took longer than I thought, it's all been unleashed. It's all happening. And it's still early. Even though the U.S. stock market is off its highs, it's still so high compared to where it should be and where it's going. And it's still so high compared to where foreign markets are right now. And even though the dollar just tanked, the dollar index is just barely below 100. I think it'll be below 90 before the end of this year, and maybe below 70 before the end of next year, which is a record low. And maybe it goes all the way down to 50 or lower. But this is the beginning of the unraveling of Pax Americana.